Now, in terms of what we're expecting from the global economy, some of you might already be familiar with this, but we are expecting a mild global recession as we head into 2023. We're only anticipating about 2.1% real GDP growth in 2022 and about 1.6% global GDP growth in 2023. These figures are consistent with a mild global recession, and we are already seeing signs of the global economy starting to slow down, and these signs will only become more apparent as we head into the end of the year as well as in 2023. Now, the key thing to note here is that this is going to be a mild recession. We're not looking at the 2008 financial crisis. We're not looking at the Asian financial crisis. What we are looking at is more of a slow downturn in economic growth over the course of 2 to 3 quarters before a mild recovery in the second half of next year. So, what exactly is driving our view for a global recession? So, there are basically three main drivers for this global outlook. The first is, of course, the uncertainty and volatility that we're seeing in Europe, which will only intensify as Europe's energy crisis gets worse in the winter months. We are looking at the fact that Europe is going to be facing major energy shortages throughout the winter, and this is going to impact overall economic output and even perhaps lead to some energy rationing within the continent. So, of course, Europe will be facing significant hardships over the coming months. We are also looking at the fact that the US Federal Reserve is hiking interest rates very, very rapidly. And this is, of course, done by design to slow down the US economy and to tame inflation. But the rate at which the Fed is hiking interest rates does increase the risk of recession. And even the Fed has come out and said that they are willing to accept a slowdown in the US economy to curb inflation. So that's another major driver for our global recession view. Finally, we're looking at the fact that China is being very persistent with its zero COVID policy, and this is really weighing on growth in the Asia Pacific region. And given that China will continue with its zero COVID policy for majority of 2023, that's going to be another factor that weighs on global growth and particularly on growth in the Asia Pacific region. Along with all of this, we also have the fact that cost pressures and global inflation will remain persistent through 2023. Even though there will be an element of demand weakening, there are still various commodity shortages, very elevated energy prices, and food shortages and high food prices that will persist well into 2023 and even some parts of 2024. However, inflation won't be as high as what we've seen in 2022. But given the shortages and disruptions that we've seen in energy markets and food markets, we do expect that inflation will remain elevated through 2023 as well. So given that we have some major global headwinds to contend with, what does this actually mean for developed Asian markets? The important thing to note is that we aren't expecting a recession in Japan, South Korea, and Australia. Most of these markets, while they will experience significant headwinds to growth, while we have slashed some of our growth forecasts, we aren't expecting an all-out recession in these markets. But what we are expecting is more of a prolonged stagflationary environment, though, and definitely challenging business conditions, but not an all-out recession. So now that we have that global context set in place, we can now begin talking a little bit about what we expect to happen in these individual markets. Now, of course, Japan, starting with Japan, we can see that Japan over the past couple of years has really struggled to recover from COVID-19. We saw major downgrades in growth in 2020 when the pandemic first hit. And in 2021, Japan's recovery was quite moderate. And just as Japan has started to open up in 2022, the country is facing a fresh set of headwinds in the form of FX depreciation, high inflation, and a slowing global economy. So, definitely, we are only looking at moderate growth rates in Japan over the course of 2022. Uh, sorry, over the course of 2023, and uh, a little bit of a stronger performance in 2024. But for the most part, we are looking at moderate growth rates for the Japanese economy across the board for both 2023 and 2024. Now, of course, there are a variety of headwinds and challenges that the Japanese economy is facing. The first and most acute is, of course, the severe depreciation that we have seen in the Japanese yen. The Japanese yen has depreciated about 20 to 25% since the beginning of this year. And the depreciation of the yen is really being driven by two major factors. The first is the fact that the US Fed is hiking interest rates very, very rapidly, while at the same time, the Bank of Japan is keeping interest rates low and supporting its easy money policy. Because there's such a wide gap between what the US is doing and what Japan is doing, investors are taking their money out of the Japanese market uh, towards the US market. So that's one of the major forces that we're seeing contributing to depreciation in Japan. But at the same time, we have very high energy prices, very high commodity prices, and very high uh, import prices in general. And because Japan imports a lot of energy, because Japan imports a lot of commodities, as these prices have gone up, the Japanese yen, the Japanese trade balance has started to get worse and worse. And this has contributed to weakness in the yen. So, what does this all mean for the yen moving forward? Well, definitely, we do expect the US Fed to continue raising interest rates over the coming months. We also expect commodity prices and inflation to be elevated through the majority of next year. So, both of these forces will continue to put some downward pressure on the yen before there's a little bit of a rally in the value of the yen in the second half of next year. As some of these interest rate dynamics play out, as some of these inflationary pressures start to come down a little bit, that's when we'll start to see the yen appreciate a little bit.
Hi, my name is Krista Reganey, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.